Here we have the current stock market update for Intel Corporation, stock ticker INTC. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders can find this information more easily on the platform. So here we have a 1 hour price chart. Each candle on this time frame represents a 1 hour trading period. And with this video, what we're going to do is redo the analysis here a bit, because I think that a lot of these prior expectations have already played out for the stock. So specifically, just to sort of re-summarize, what we were looking at previously was a stock that was caught in a very clearly defined uptrend channel. We also saw the development of a bull pennant pattern, which did ultimately break to the top side, and we did see the price target ultimately met, roughly very close to being met here. So we did, really see this play out as expected here. And overall, share prices have managed to maintain this upward channel for some time. Until recently, we saw the stock actually break to the downside and break out of this formation. So overall, this really doesn't look like much of a bearish break because we have started to find some support. But what this tells me at the moment is that this prior analysis here does need to really be redone, because we have sort of met the expectation for the initial chart pattern. And now this upward sloping channel has completed itself. So we will not be looking at that going forward here. So what we're going to do now is reassess the situation a bit. And we're going to look at some key support and resistance zones here, because we did start to see some fairly critical levels that did develop. As we can see, if we're looking at this price move from roughly $20.40 to those prior highs at $24.66, we can see that the stock did manage to find some very good support here, right around the levels that we expected, which was this $22 area, because this was a 50% Fibonacci retracement zone. A 61.8% Fibonacci retracement zone. Sorry, I'm typing as I'm doing this. So this would have been a 61% Fibonacci retracement zone, in addition to being the 200-hour exponential moving average, which is this blue line here. And as we can see, the stock did manage to find support here on more than one occasion. So this level did ultimately turn out to be a very strong level of support. And this is really the reason that I wouldn't consider that downside channel break to be necessarily a bearish event. I think that it's more likely that this bullish chart pattern just sort of played itself out and ran its course. So, ultimately here, I wouldn't really consider this to be a bearish break. I would consider this to be more of a sideways consolidation period, because we did really find some strong support at this expected level, which came in at $22 per share. And then since then, we have started to post some higher highs as well. So if we sort of look at the chart history here, we can see that we first started to develop some support right around 2350, and now we're roughly moving into just above 2380. So there are some upside price movements here that are encouraging, and then you also have the fact that share prices did break above the entire exponential moving average cluster, all four major exponential moving averages, and share prices have mostly been bouncing from that 20 period EMA. We did see one instance where the 50 period EMA was tested here, but there was a fairly significant bounce from that point. And we are now trading back above the entire cluster. So overall, I would consider this to really be a period of sideways consolidation, even though it really does look more like, that uptrend channel broke to the downside. It would look like that could be a bearish event, but I think this is more sideways consolidative in nature. So finally here, just to close out the video, we will also look at the indicator reading here in the relative strength index, which is important because it's a commonly watched time frame, and what we can see here is that the signals here are positive. Overall, the trajectory and the momentum reading is bullish, and this prior downtrend signal in share price momentum has now been broken to the top side. So, we can't say that share prices did fall enough so that the relative strength index moved below its own exponential moving average. which is a mildly bearish signal. But overall, I would consider this to be a bullish reading because we did break through this prior downtrend in the bearish momentum condition, and this longer term uptrend in momentum has remained intact. So we're still being supported by this positive momentum. So even though there is this minor sort of bearish cross here, the balance of the evidence here does remain positive. So just quickly here, just to close things out, we'll look at the main resistance levels here. To the downside, I would consider support to be moving up to roughly $23 per share, and then the more important level here is that $22 area. If we do see a break below there, given that we're currently mostly kind of sideways here, I would then consider this to be a bearish outcome, and we could start to then target lower prices. From here, that has not happened yet, so. From here, the upside level to watch next comes in at 24.66. It's not far away at the moment. We're trading roughly $1 away from there into the Friday close. So, this is a price level that I would expect to be tested here relatively soon, as long as these bullish conditions continue. And then from there, we really just have to keep focused on that $25 level. I think that will be a significant price zone. We could see some oscillation around there. Trading a bit above and a bit below. I think 25 could most likely turn into sort of a consolidation point and another sideways movement. And I understand that that's not really what bullish traders want to hear, but at the same time, what we're dealing with is a major downtrend here, a major collapse in share prices. And what you want to see here is a basing out, is a continued movement higher, so that we can continue to see higher highs and support levels that are formed at higher levels. So that's the more encouraging outcome here. People that are just expecting their stock to just rocket higher, that's for GameStop. If you want to trade GameStop and AMC, and those stocks, that might be where you want to focus your attention if you're looking for those types of price moves. Here with Intel, this is what you want to see. You want to see share prices base themselves out and then form higher highs in the process. So here's the current stock market update for Intel Corporation, stock ticker INTC. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.